Welcome back to Real Macroeconomics and Investing. All right, so let's take a look at oil. I'm going to do this video because I don't want to sit there and write a chapter about what's going on with oil right now. So it's much better to do it in a video. I'm going to update that into this post that I published back on December 25th, Christmas gift. All right, so let's get started. First of all, this is the way it looked. Back on Christmas. All right. And then we got that big move to the upside the following day. Since then, it's kind of created this volatility back and forth, trying to struggle with this trend line here. All right. And this is why I say, the crossing of a line in of itself doesn't mean a whole hell of a lot. Okay. It's what happens subsequently that matters. Now, if you look at something uh, back in time, for example, here, right, it broke the line, and then what happened? It went into this structure. This is actually a bearish structure. You have the compass here, okay? You got this bearish formation. Now, this did have the potential to break out. There was a lot of news in the Middle East and so forth and whatever. Ultimately, that started to break down, okay? And sure enough, it became 1, 2, 3, and then it started to fall apart. All right. So that's a wave 1, 2, 3, and then it went into a channel. And this is the way bare knuckle charting works. All right. Something that I do. All right. Now, since then, we had a very nice, well-defined 1, 2, 3 down move. The structure is pointing down. Next move should be up. Okay, that's fair enough. The way it looked back in the day when I posted it was like this on this day. All right, this has the potential of breaking out. However, what it did is it did break out, but no follow through. So what does that tell us? Well, there's a number of ways that you can um, analyze this. The first one is that it's still building that pressure. It's still building that pressure right at that resistance area. Eventually, it's going to break to the upside. However, um, if you draw a trend line here, you can see that the probably the best way to play this in terms of risk reward, because that's what we do. We can't predict the future, right? Risk reward is to buy the breakout. Okay, that's probably the safest way to do it. There's other ways. Um, in terms of bullishness, you got your first high, now you got a second high. Okay, it's going in the right direction. However, there's always a however, right? However, look what's happening. You're starting to build a wedge looking formation right at this resistance area. I hate wedges. I don't like them. And the reason I don't like them is because they break one way and then do the other. Or they break down and then they start going up. Okay. And one thing's for sure, it's going to break, and the way it breaks usually is going to be another move to the opposite direction. It confuses people. It makes it very, very complex. All right. And people get whipsawed and it turns into a disaster. All right. So the fact that we do have higher um, lows is a good thing. However, you're not seeing that breakout. Okay. So going back to what I was saying, probably the best move is to buy the breakout. Well, not if it's a wedge. Okay. So you got to kind of step aside. What's the best way to play this right now? The best way to play this is to see something like this. You want to see a drop, maybe to about 65, 66, something that's going to break this line here. Okay. Um, see a drop, watch it turn around and take off. Okay. That's the best way to play that. So your risk reward um, becomes very simple. And you can take a little bit of even if it goes a little bit lower. The lower it goes, the more you want to buy, right? So you go from trying to buy a breakout right now to saying, you know what, this is more of a value play at this point, and I want to buy the lower that it goes because I will get a pop at some point, and then I can start setting up a nice trade to the upside. Okay, that's probably the best way to handle something like this because I've said this before. A lot of people think they can guess, and they can tell you what the future is. Nobody can tell you what the future is. I don't know what the future is. You don't know what the future is. Some war breaks out tomorrow that's going to, somewhere else on the planet. Some no nobody can tell you these things. Not even me. Now, what I can tell you is that when OPEC starts to cut rates, it's not bullish for oil. And I've said this many times. I said this is great learning lesson for everybody. I'm going to do it in real time, and not even two wars could push oil higher. Now we're getting to this point where some of the fundamentals of macroeconomics are starting to change, and there's something that's going on, which I won't talk about here, that leads me to believe that oil may have some upside. All right. So again, the best way to play this is because it's not too far from where I said, hey, you should look for the long side. Okay. We're right back up there. You could take your position off with a 0.5%, 1%, whatever it is, minor loss. Wait for this drop. All right, and then take it to the upside. But you got to buy incrementally. You got to buy with patience, and that's the way I would play that in a safe manner and make some nice profit out of the deal. All right. I hope that explains everything. If that should happen, what's going to end up happening to this whole entire structure is that this will become an expansion. Okay. And then the 2 is going to come here. And then the 3 is going to be wherever the 3 ends up. And then we're going to look for the upside. Right. These structures always correct. When they correct, I cannot tell you precisely, but they do correct. That I can tell you. That always happens. All right. That's it. Take care, guys. I'll talk to you soon. Bye-bye.